Hello to all of our guests, and welcome back to another episode of Fintech Rapid Fire with Scarlett and Dove. And today we have a really exciting guest, Brian Barnes, the CEO of M1 Finance. Super excited to have him here. The topic today is the power of super apps for consumers. So really excited to dive in with these two. Quick introductions for anyone who's new to the show. My name is Dove Marmore, Chief Operating Officer for Rails Bank North America, where we're focused on building financial products for tech companies, fintechs, and lots of others across the region. Basically, our mission is that anybody can become a fintech. Let me go ahead and pass it over to Scarlett next.
Sure. Well, as Dove said, we are so happy to have you back. It's Friday, yay! For us on the East Coast, afternoon, which means we're almost in the evening. Poor Dove is in the morning, but yeah, so excited to have you all here. I am Managing Director, Chief Strategy Innovation Officer at CCG Catalysts. We are really merging the fusion of banking and fintech, and here to talk about all those things, which I'm super excited about. So, Brian, let's hear from you.
Yeah, thanks for having me. I'm also early in the morning, so looking forward to that afternoon Friday to get things going. But Brian Barnes, founder and CEO of M1 Finance. We're talking about the finance super apps. That's what we call ourselves. We really combine the best of digital investing, digital borrowing, and digital banking into one comprehensive application. We manage about $4 billion on 500,000 customer accounts. And the company's been fortunate enough to raise about $175 million of venture financing.
That's it?
You said that so casually.
So, yeah, it is a lot of money. It's we now have to put it to good use.
It must be a fun check to see hit your account. Great. So let's go ahead and get kicked off. So just the structure is that when we have a guest, we do 7 minutes per question. So we'll kick it off with the first question, and this one will go to Brian first. So Brian, how does providing a multitude of financial services in one place increase the likelihood of financial success for consumers?
Yeah, I think there's sort of two main aspects of why it would increase the likelihood of success for consumers. The first one is when you look at someone's finances holistically, it's impossible to optimize just one component of that and sort of say, the financial life is good. So, if you optimize investing and you deliver an incredible, annualized return of 15% a year, just compounding forever, that's absolutely fantastic. It doesn't matter if you're spending more than you're saving or if you have high cost debt that is eating away at those returns. And so we really do view that when you look at how you view your entire financial life, it's how you invest, it's how you borrow, it's how you spend and save money. And so having all of that in one application really gives you an entire view of your finances. And when you talk about optimizing your finances, you're optimizing all of your finances rather than sort of one component that really it's like the tail that wags the dog. The second thing is just like ease of use from the consumer's perspective that I'm sure you guys, everyone listening has, a finance folder on their phone with 15 different applications, and it just becomes cognitive overhead of, managing all of that you have sort of a point solution for how you transfer money to friends. You have a point solution for your credit card. You have a point solution for your checking account, and they're all distinct, and you have to manage the money flows across all of them. And it just becomes very difficult to do what you're supposed to do with your finances. And so I think bringing that into one application, one platform, just simplifies things dramatically. It gives you an entire picture of your finances. And then, we'll talk about it. I think there's ways that your finances are overall better when you have all the products under one umbrella versus, putting together a suite of point solutions.
Love that answer. Scarlett, over to you next.
So this question is one that I find, first of all, Brian, that was a great job. You're definitely on point with the rapid fire thing. This is what this is about. But I think about it, I take a slightly different approach, okay, because remember, I'm here, I hate to say it, but I'm the ex-banker, right? And I was always on the tech side, really, but you know what I mean. And For me, I think of it as it really depends on the customer. So some will want that, what you just talked about, right? So you gave the example, we got 15 apps on our phone around finance. I definitely have that folder. I got the folder for social. I got the folder for everything else. So there are definitely going to be a significant group of the population that's going to want everything in one place. And some might not. Some might like that separation. So I think when we think about what is success for customers, it goes back to, why is that a benefit for them? Well, the more data that you have on them, if you use it responsibly in a way to empower and help them, that's going to be a great thing, right? You have the ability to meet the needs of the customer where they are, and maybe even meet the future needs of the customer. So the one example that I talk about a lot is, okay, if you have all this data on your customers, you're seeing that maybe there was a direct deposit continuously, and then all of a sudden it stops. That tells you something. Maybe they got a new job. You don't see a new direct deposit. Maybe that's time for you to reach out about a short-term loan. So there's a lot there that if you have all of this information, all of these opportunities and services in one place, it enables them to serve the customers better. Responsibly is the important word there, not to take advantage of. Dov?
So the first thing I'm realizing here is that your guys' iPhones are obviously a lot more organized than mine. It seems like you have folders for a lot of different things. I just have like 7 screens that I just keep on searching through. But I do use my Chipotle app quite a bit and my Starbucks app. Those are the most used ones. In terms of, I am obsessed with super apps. Because I find that like actually fragmented financial experiences, when I have my bank account one place and my investing someplace else and my borrowing someplace else, one, I just lose track of it, right? And it also, as a consumer, has me sort of realize that like, I don't understand the interconnectivity between all those things, but truthfully, they all should come together, right? And I'll always remember one of my favorite personal finance professors. He basically had said, you know, the key to financial success is always investing in yourself first. Now, it's the opposite of the way that most people invest, right? Which is basically, I'm going to spend as much as I want, and whatever's left over, that's what I'm going to put in my investment account. But imagine that if before you bought a Starbucks, you invested $4 in yourself first, and then you bought your Starbucks. And if you start to think about the impact of that over time, it becomes really, really powerful. Now, if you go to the average person and say, okay, invest $4 every time you're about to go to Starbucks, but the investment app and the Starbucks app are not connected, or there's no kind of connection between the two, you're just not going to do it. But things around these super finance apps, when you connect spending and investing and borrowing and saving, and you can kind of bring that full circle so that I can automate it with a few settings, but then really not think about it. To me, that's the power of the super app, is kind of also connecting my financial success with the things that I control every day through spending, saving, borrowing, and all these other important things to finances. And I think there's also the gamification of it that you're starting to see more and more of. I can compare myself to my friends, I can share my investments, I can do a lot of those other things. So to me, that becomes more and more impressive as you kind of move over time.
So we have 1 minute and 20 seconds. I'm going to test this rapid fire. Brian, you're gonna kill this. So can you give us in like a minute time around what was the catalyst for starting M20 or M1? What was the idea behind it? Why now?
Yeah, so really M1 was the manifestation of the personal finance account I wish existed on the marketplace that I didn't see, and I didn't see people building towards. And it's really, a fundamental belief of holistic finance rather than one component. It should be very personalized to you. You should be able to define your custom plan and the like. Your finances are personal. Your how you manage your money should be personal as well. It should be automated and incredibly low cost. And if you wrap that all together in a very seamless, intuitive application, it just benefits people's finances. And so, when I looked at, I had the 7 different applications to manage my investment, my borrowing, my spending. And it was just, I had my separate Excel spreadsheets to, say, here's where money should flow. And I said, if you can set up a very intuitive way to organize this holistically and just have the software in the background automate it according to your custom plan, that's a huge benefit. And so it was really solving a personal need that I figured if I wanted it, other people would want it as well, that people are always in search of great financial solutions. And 1 second left. That was pretty good.
Solid.
Impressive. This is why you've raised so much money. You're good on the fly. I love it. Okay, so slightly different question here. So we know banks have provided a myriad of financial services for some time, yet fintechs like yourself, like M1, have seen a lot more growth, especially recently. So talk to us about sorry, can we restart the time, please, as soon as I'm done? Perfect, because I'm almost done with the question. So can you talk a little bit about how fintechs are rethinking, why are you approaching this differently? What does that look like?
Yeah, so I think it somewhat dovetails into your response to the first question of, like, banks have had a myriad of products for a while, but they've all been like mediocre products. And so in that scenario, it actually does make sense to sort of go through the cognitive overhead of having a best in class point solution for each aspect of your money management. And so I think, like, in that world, it absolutely makes sense to be fragmented. That, Wells Fargo has a checking account, they have an investing account, they have the ability to borrow. They're just not that great. And so it makes sense to go put together a portfolio. I think fintechs are doing two things. One, they're actually creating great products. And so you can have a best-in-class investment platform, best-in-class checking account, best-in-class borrowing, all under the same umbrella. And so you can, like, consolidate and do it. That being said, I still don't think it's enough to solely rely on brand affinity. Just, because I bank with you, I should also invest with you. I think where the magic happens is when the platforms or products become additive, so that the whole is greater than the sum of the parts. And if we look at it on the M1 side, we have an investing platform where you can invest for free in an automated portfolio. That's a best-in-class investing platform, but it also allows you to borrow for cheaper than you could get anywhere else. So you can borrow 35% of your portfolio's value at 2%. That's not something that you can put together with point solutions out there. And so it's by managing all of your money on the M1 platform, you get over and above what you could ever put together with point solutions. And I think that's where the magic happens. And that's what we spend a lot of time thinking about, is how to really integrate and consolidate this so that the platform is robust rather than each product is good or there's brand affinity.
It's a great answer. I'm going to build on it, is that I think there's just been a fundamental shift in how businesses are created. And the old view of banks was actually fully focused on functionality, right? So keep your money safe, manage your risk, open a place and you can see your balance, and all that was fine. And I think today's fintechs really focus much more on the user experience, and user experience is key. So if you kind of look at the history of Apple, computer companies before Apple started with, what is the functionality going to do? And then they had the designers create a box that could fit all the components around it. And you ended up with every ugly computer looking exactly the same. And then Steve Jobs said, design and customer experience is at the center of everything. And he said, Jony Ive owns what the final product is going to look like and feel like and experience it. And hey, engineers, you need to build around that design. You need to build around the customer experience. And the difference that I'm seeing today between the bank products and the fintech products is that the product manager is the hero in the fintech companies. They're all about the user experience, user-centered design, and kind of everything that you experience in a product is part of the product itself. Where in the banks world, historically, it was really the business leader. So how do I create stability? How do I increase margins? And those two focuses and what's important to each one of those companies actually shows in the final customer experience of the product. So when I look at my favorite super apps, it's just so seamless and so fun to kind of go through and look at my finances every day. They've gamified it. They made it great. And M1's just done a fantastic job with this. And it just will never feel that way inside my City app. Just won't.
Yeah, you made a lot of really good points there. So before I answer, because we have a little bit of time, so I'm lucky. For those of you that are watching, please go ahead, leave comments in the comment section, ask questions, because if Brian has time, we can try to ask a few at the end as well. So go ahead, you can put them in now. I'm watching. That's why I'm looking now, not because I'm not listening to the conversation. I'm trying to multitask. So go ahead and ask the questions. We'd be happy to have them. I think both of you commented on a few key things, right? It really goes back to that experience. Part of it is life cycle, right? So there was a period of time where the idea that people were going to banks for everything. You were getting your mortgage, you were doing your loan through, your loan for your car there. That's where you were banking. Then we had the infamous unbundling of banks, right? And that every conference that I went to on planet Earth had that same graph Wells Fargo with like how all the fintechs were disintermediating every part of it, right? So now we are seeing this idea of rebundling, but it goes, you said a few different things, Brian. You talked about holistic and personalized, which is the point that I was like alluding to a little bit before around data. There is certainly an opportunity for that, but it's about the experience. And truthfully, fintechs can iterate more quickly. They don't have the same legacy tech issues that a lot of the banks have. I mean, let's be fair, the legacy tech is kind of an issue for most of the industry. And they typically have better marketing engines. So yes, it's about that experience. And part of that is about how you tell that story in a way that resonates. The gamification is key too. So I think, Dove going to a super app and he's really enjoying that experience is one thing, but Dove's the CEO of North America for a nice fintech. So, but even for people who are lower economic status, the psychological impact of gamification, and even with the few bucks you can invest and still enjoy the experience, learn from the experience, and a little bit of growth makes a lot of sense for them. So that's my thought. That's my thought there. All right. I think unless either of you have anything to add, maybe we'll give.
Yeah. I would have something to add. Like when you have those point solutions out there, let's assume that someone has a Chase account and a Schwab account. So they're, the biggest in the checking account space and the biggest in the brokerage space. Chase is not incentivized to encourage their customers to invest more. They want you to have excess cash, idle cash balances, because that's how the bank makes their money. And so them pushing money to Charles Schwab is them losing out on economics. When the company sort of approaches it as we're managing your entire financial relationship, and we're happy if you invest more because it benefits the consumer and it stays on the platform, we're absolutely thrilled to optimize around things like that. And so I also think that's a dichotomy that exists when you sort of say, hey, this is a super app. We have the ability to focus on the whole of the financial life rather than, sort of like discouraging beneficial behaviors by default.
Absolutely. That's a really good point. All right, Dov.
That's a great answer. So next question, and Brian, will send this your way first. Where do you see financial services 5 years out? And as a connected question, how do you define success?
I'll go first on the success question because it sort of dovetails into the where do I see it, because I think we're trying to build towards that. I think there's two things: a scale of impact, and we measure that by users and dollars that we manage. So we're in the 500,000 range, I think, getting into the millions and tens of millions. You're just a bigger financial institution. We're in the billions range, getting into the tens of billions and hundreds of billions means you're influencing more dollars. And so, I think there's just a general scale aspect. And then there's also are we benefiting someone's financial life? And I think that's self-reported. I think that's, there's quantitative ways to assess that of, do they feel more confident? Do they have more money? Are they saving more? Are they investing more? Is it, is their cost of borrowing going down? Is it just an enjoyable experience? Like you talked about with, the application sort of taking the Apple approach rather than the mainframe computer approach. And so I think all of those things are what we focus on, is improving the customer's financial life or well-being and doing it at large scale. In terms of what I think that will look like, it's almost akin to having a little financial advisor in your pocket, where every aspect of your financial life is just optimized in the background. You can sort of override that and you have as much personalization as you want, but it's just the beneficial behaviors happen by default. And I think that's why M1 is building the holistic application, the robust application across multiple things, having it be personalized, and then focusing very heavily on automation. So any time a dollar comes into the M1 platform, it's just put to use in the best way for you individually. And so I think that's what finance is moving towards and what we're hopefully leading the charge towards. I think we're furthest along, and we'll continue to push the boundaries.
God, I love that answer. I can't tell you how many times I'm just sitting there like, I really want to invest this week, but it just always kind of goes into the background, and like that automation of putting it to work is just so important for financial success. Scarlett, what do you think?
Oh man, first of all, I already got tweetable moments there. Right there, Brian. Beneficial behavior on default, like hallelujah. If that happens, I think we will as a whole be so much better off. So I would say, thinking about the future, thinking about kind of the financial wellness component, when I think of that, I think of awareness and being financially literate, right? So you talked about, Brian, the ability for savings and things like that. there is still a big gap on who has access to those things. And a lot of it is not for lack of excitement or lack of, there's even people who have money to do that. They just don't know how, they don't know where to get started. And remember those 15 apps, like there's so much out there that we have a bit of a hurdle to go over to get people more comfortable doing this. And so I love the idea of automation that you were talking about, Brian, but I also think it's important for people to have like the basic foundational understanding and knowledge of what's happening and how by doing this earlier, sooner, it impacts them in the long term. Because we got to talk about psychology again a little bit here, right? Like we're instant gratification people. Think about our social channels and how that's translated. So, but if you can show them by doing some of these short-term things now, it's going to have long-term implications on yourself and your family financially. It makes a lot of sense. And then you get to the automation. Like Dove, I would love to actually go spend more time looking at my investments. I just don't honestly have the time. So if you have this incredible, automation and AI on the back end to say, this is where I should be investing based off of these things and parameters around me, let's do it. And I also think it's going to be something that people are going to be more open, to talk about and less of a taboo. Like wellness, whether it be health, whether it be financial, people don't talk about. I think that's going to become more mainstream moving forward in the next 5 years.
Love it. I'm an analogy guy. So kind of the thing I would draw a connection to is over the last 10 years, you just saw the explosion of direct-to-consumer brands. So you saw Warby Parker take on Luxottica. You saw Away take on Samsonite. You saw Third Love take on Victoria's Secret. You saw all these consumer brands that came in and they took on companies with 60, 70% market share within a specific product category. Sealy, Gillette. I mean, you just saw so much disruption. And what most people don't know is that Shopify was actually the catalyst that allowed all that to happen. So Shopify basically made a turnkey e-commerce store so that anybody that wanted to build a new direct-to-consumer brand, they actually were 80% of the way down the path, and they could just optimize on their product experience and customer experience, everything else like that. The other thing that was cool is they all focused on these big Goliaths that focused solely on the utility of their product. So Gillette making the best razors or Sealy making the best mattresses. But those companies forgot about the entire customer experience around their product. So razors locked up in glass cases, high pressure salespeople at mattress stores, Victoria's Secret models that don't look like actual people today. So like everyone kind of took this one aspect and basically said, I could make that better if only I didn't have to build the entire infrastructure necessary to make that better. And that's what Shopify sort of did for the market. And I think right now you have that same scenario happening where financial products as offered today have terrible customer experiences all around them. And I'll give you an example. My rewards credit card that I spend a ton of money in an annual fee, I thought I was getting 4x points, only to find out that they devalued a point by 50%. So really I'm getting 2%. And like, I could not be more angry, and I'm completely shutting down that account. And it's just gamified and tricky and awful. But frankly, they didn't have to care because there was nobody else that was going to come in and disrupt them. And I think now that we have these platforms that are coming out that have built the entire end-to-end infrastructure, like what we're doing at Railsbank, we can empower the Warby Parkers of financial services and the Dollar Shave Clubs of financial services that are basically going to go in there and say, yeah, the experience sucks, and we're going to fix all the elements around that and just provide a fantastic thing that you can't wait to open the app in the morning, right? So my prediction is that 5 years out, we're going to bank with these direct-to-consumer brands that we've come to know and love, and that more and more the big behemoths, yeah, they'll still own 30%, but there'll be a big segment that kind of comes into this new era of direct-to-consumer finance.
Man, you use the word love to describe a relationship with financial services. That in of itself is, I mean, we're getting more and more there with the likes of M1s and others, but that would not be, you wouldn't typically go and be like, how do you feel about your relationship with your bank? One of love. There's many words that I think people use, but definitely not love. And you always do analogies, Dove. I don't think we'd have a FinTech Rapid Fire without an analogy, but it makes it digestible, so that's good. Okay, so speaking of analogies, Helen loved your analogy. She loved the Apple one. But question for you, Brian. So you have had great success with fundraising. If you could give one piece of advice on a successful fundraise, what would it be?
True. Like as bad as it sounds, I think timing matters a lot. That, M1 historically has raised $20 million or $25 million up through 2020, and then 150 in the year since. And so, it's back weighted to the traction and success. I do think M1 has always positioned ourselves as a long-term compounding, next generation financial institution. And Warren Buffett has a quote, Jeff Bezos has used it, that you can sort of be successful launching a ballet. You can be successful launching a rock concert, but don't launch a rock concert and advertise it as ballet. Might have gotten, the word screwed up, or, vice versa. But I do think it is finding the investors who have the exact same mindset that you do in building the business. Because I think these businesses do take a long time to build, and you want people who are supportive over long periods of time, as opposed to, what is the next shiny object.
Dove, any thoughts on that?
Take the money. Take the money when it's available. It is one. We're in a fantastic time for fintechs to raise capital, and having folks like Jamie Dimon actually give validation of what a threat it is to traditional financial services. I just think gets everyone more excited, and just really know how to tell your story. And to Brian's point, make sure you have investors that are aligned with the vision that you have, and not ones that are, want to get in and get out as quickly as possible. Because I think you will be successful by changing financial services. You will not be successful by searching for your next exit.
Yes, I love that. I see some likes on here. So I got to ask this question. You talked about, fintech is definitely the space. This is not from them. This is from me. So sorry, guys. But are we in a bubble? This question never ends. Are we in a bubble? Why or why not? And within fintech?
I think there are it's the classic middle ground of there are areas of it. Broadly speaking, I do think there's going to be a cohort of fintech companies in this generation that become the next generation Fidelity, Schwab, Vanguard. These companies are iconic financial brands that were started in the 70s, 80s, whatever it may be, and compounded at incredibly high rates for incredibly long periods of time. And when you look at the big banks, they compounded for hundreds of years. JP Morgan Chase is older than the country. So I do think there is the opportunity for companies created now to have market caps rivaling those big players, and that's hundreds of billions of dollars. I do not every company is going to make it, and I think every company is funded with the implicit assumption that it could be that. And so I think valuations are high, but I still do think on the macro trend the opportunity is there in a very fundamental way.
Yeah, I think mirror your comments. I think some businesses are overvalued and other ones are undervalued, and it really just depends on the long-term longevity of that specific business's business model, right? Just as and I think as investors, they need to understand where do you view this going and how do you make money in the long term, and who's a potential acquisition target. There's a lot of nuance that goes into it. So as a whole, yes, the industry is valued quite highly, but I think there's a lot of unicorns in that segment, and people are placing some very smart bets.
Unicorns, decacorns, all these type of crazy corns in here. But I would say, I think that most people that are listening and watching us live right now are probably already in our space. But if you're not, now is still the time to get into fintech. I mean, there's a long road ahead. I mean, if you think about the impact of what happened last year with COVID, Brian just told you that he had 25 million in fundraising up until 2020 and got another 150 in the last year or so. There's a lot that's still to be said for the space, and I am very excited about the future of our industry. I will tell you that. And I think the people that will benefit most of anyone are the consumers and small businesses at the end. All right.
Should we call Brian 150 corn? Yeah, dad joke.
All right. I think, there's a slight delay, but it looks like I got all of the high comments and questions here. So we thank you for your time, Brian, and go ahead, Dov, if you want to wrap it up, I'll let you do that, and we'll go from there.
Just a big thanks to Brian and Scarlett. I think this is our best episode yet, and really excited. And thank you all for joining us again. And we'll have another one coming out in a couple weeks. So
2 weeks from now, 1 p.m. Eastern, and we got some other great guests too, like Brian. And you can find, he's easy to find, Brian Barnes. I'm doing big things. Looking forward to see where you go from here, Brian.
Thank you. No, I appreciate you having me. It was a lot of fun.
Awesome.
Have a good weekend, everybody. Bye-bye.
Thanks.
Bye.